Hello traders, welcome back to my YouTube channel. Thank you so much for clicking. Kindly remember to subscribe, like and comment down below. Hello traders and welcome again. Thank you for clicking. So welcome to my YouTube channel. So today we are going to be looking at a fair value gap trading strategy. So actually this strategy I've developed over a proven system that I've done over a couple of times. And so actually this methodology is in my course. You can actually check out my course in the link description. You can preview the course and see if it fits you, so that you can enroll if you're interested. So today we're going to be looking at a fair value gap trading strategy that I've personally developed over years of experience. So first of all, what I like to do, I like to look at the daily chart. So this is the Euro USD daily chart. So first of all, I like to look at fair value gaps within the daily chart. So I start my analysis on the daily chart, and then I come up with a potential area where the market may revisit. So in this example, we recently are looking at the Euro USD continuing higher. So I have outlined this fair value gap here. This was created in 12th January 2023. So after outlining the daily fair value gap, that's all I'll be doing on the daily chart. So once I have this fair value gap, so I'm not forcing that this market will turn here, because in hindsight you can see that it came down here and turned. But once you outline the fair value gap on the daily chart, all you have to do is now drop into the 15 minutes chart and watch what the market is doing. So right away we're going to drop into the 15 minutes chart. So in the 15 minutes chart, what you want to be looking for is some form of liquidity that has been taken out. So in this day, this was the same. So if we look at maybe the day that it came, this was 17th of January 2023. That is when it dropped into that imbalance. So we had left this imbalance back on Friday, then it came on Tuesday and dropped into that imbalance. So we're seeing actually Tuesday it dropped at around 12:45 p.m. New York time, and the end trade was given in the next day, which is Wednesday. So the very next day, this Wednesday, we are given this entry. So on the 15 minutes chart, what you are looking for is some, since you're expecting this imbalance to react and take the market higher, you're looking for some measure of sell side liquidity to be taken out. So this line I've outlined here, it's actually this liquidity which was taken out, and you want to be focusing on the time sessions between London session and New York session. So actually, if you are not aware of maybe the teachings of time and the specific time we're talking about, you can actually go and check out the Inner Circle Trader, who teaches the kill zones, which are the specific times that I'll be using. So I've already outlined here the specific time. So this is midnight open. So when focusing on the London session, I like to focus from the time between 2 a.m. So if you have noticed, my time is UTC -5, which is New York time. So if you go to TradingView, actually it is this time labeled New York time UTC. So that is the time I'm using here. So once that liquidity is taken out, I like to observe now during the session of London between 2 a.m. and 5 a.m. So 2 a.m. was about here, but I usually start around 1 a.m. to watch, and 5 a.m. you expect this setup to form, or rather it could even form during New York session. So it's not necessarily during London, but it depends on when or what time this imbalance on the daily chart was hit. So once you see sell side liquidity has been taken out, in the 15 minutes what you want to look for is a break in market structure. So this market took out liquidity here, then we are seeing a short-term high being created here, then the market started dropping, but then you see the market aggressively come and take out this high. So if you're not seeing clearly, maybe you can zoom in to that area. So once liquidity was taken out, we are seeing that the market actually created this high, and then it started dropping, then came and took out this high. So once this high is taken, that's what we're calling a break in market structure. So once you see this break in market structure, you want to see also the market leaving an imbalance on the 15 minutes. So from this imbalance, actually, this is where entry will come in, but you're not taking the entry in the 15 minutes because our risk will be a bit high. So you want to reduce our risk down to maybe something less than. So if you check, this is about. So if you're taking an entry in this imbalance and you're placing a stop here, this is about 15 pips. So we want to reduce our risk further. So what we do within this imbalance, inside this imbalance, you now want to drop further into a lower time frame than the 15 minutes, and now look for the same signature, a break in structure and an imbalance. Then you can base your entry now on the lower time frame. So if we drop and check, so we'll be dropping into the 3 minutes chart. So you can drop either the 5 minutes, 3 minutes, or 1 minute. So I like using the 5 or the 3 minutes depending on which one is more clear. So before even we drop, I like to point out that in terms of targeting, you can see I've outlined 3 targets here. So in terms of targeting, you want to focus on the nearest liquidity first. So the nearest high is for this one that could be targeted right here. That is our target number 1. The second target is maybe filling an imbalance. So just aim for that high of that imbalance. That is the second target. And finally, the liquidity above, which is the daily target or the daily liquidity. That is the final target. So let's drop down into that imbalance on the 15 minutes within the 3 minutes chart. So looking at this 3 minutes chart, this is that break in structure in the 15 minutes. So once it was broken, leaving this imbalance, we want to come into this 3 minutes chart. What we want to look for is once it comes into this fair value gap in the 15 minutes chart, you want to see also a liquidity being taken out, so sell side liquidity being taken out, and then it breaks above a short-term high that was left, leaving an imbalance. Then your entry will come within that imbalance now. So you'll take your entry here, place your stop below this loss, and then now target for those. You target for the final target of the day, but you can also take your partials in target 1 and 2. So I've outlined here how you could have entered. So the entry was about right in that imbalance. Then you're placing a stop just below that low. So our stop was just below that low. And then you're aiming for that target. So actually you're getting about 6R. So that is how you utilize this fair value gap strategy. So that is all about this fair value gap trading strategy. So actually if you want more information about what I teach or what I do, you can actually preview my course and you'll see maybe I have a flow of concepts that can actually teach you how to get such setups actually from not only the fair value gap but right from the liquidity. I also teach about order blocks and how you can frame your entries like this and create your own trading strategy that you can utilize, whether you're a scalper, whether you're a position trader, swing trader, day trader, it doesn't matter which kind of trader you are, you can utilize these concepts that I teach, and actually it can be very beneficial for you. So go check out my course in the link description. You can preview it and see if it fits you, and then you can decide to enroll and join my private group. So thank you so much. That is all about this strategy. See you in the next video. Thank you so much guys for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you want to see or any suggestions you have. Thank you.